Welcome, everyone, to another Idoni podcast. We're here with Cameron Norfleet, real estate agent here in Connecticut. And today we're going to talk about the Connecticut market, things we need to know for investors, landlords, and property management companies out there looking to get Cameron's take on today's market, where we are, how we got here, and where we're going. Hi, Cameron. How are you doing?
Doing well. I definitely appreciate the opportunity to speak to you and your audience. I'm doing well. I can't complain at all, man. Life is good.
Okay, great. Good to have you on. So let's talk about the Connecticut market. What are you seeing as the current dynamics of the market today?
So the current dynamics of the market today, I would say, is crazy, ludicrous, absolutely absurd. that's how I would sum that up. The market is crazy. It's and this is no new news to anyone, right? Everyone knows that the market is extremely hot. It's a hot seller's market. It's difficult for buyers. It's great for sellers. So my recommendation to anyone that's currently in the market to buy a property is to be patient. If you're an investor, make sure that you go by your numbers. Don't let emotion get to you, and you're, whereas you're like, listen, I want to buy a property. Let's just offer what they want, or whatever the case may be, because you'll regret that on the back end. But it's a crazy market out there, and patience to all the buyers out there. It will happen. Just be patient, consistent, but patient.
Okay. What's your listings like these days? I know, you're the investors, realtors. We have a lot of investors looking to buy. You're saying we're in a seller's market right now.
Absolutely.
Should investors think of listing at this moment, cashing out?
Yeah, so it depends. It depends on your situation. So, if there's a property that you have, and it's like, for whatever reason, this particular property doesn't quite fit into your portfolio the way that maybe you hoped that it would, then now would be a great time to offload that property. And that could be for a variety of reasons. Maybe it's not cash flowing the way that you wanted it to cash flow, or you have, you have several nuisance tenants in that property, whatever the case may be. Those properties, absolutely. I think now is a good time to get rid of those. Maybe you're at the end of your investing career. You've been doing this for 20, 30, 40 years. And it's like, what, should I, is now a good time to kind of offload the portfolio? Absolutely, 100%. Now for someone that's still in the beginning, or you're not quite ready to retire at this point, I don't think, actually, and this is a real estate agent that's saying this right now, right? I don't think that now is the time to sell, because real estate is it's a long-term game. You know what I mean? So I mean, if you have planned on selling, your portfolio or what have you, at 20 years from now, why sell it now? Just because the market is up, we might experience another dip, between now and the time that you were planning on selling it. But by the time we get there, you'll be fine. So it really depends on your situation, and which is my advice with a lot of things that may come out in this podcast interview. But my advice to many people is, it depends, when they ask, questions, because it really depends on your particular situation.
Okay. And for our investors who want to purchase and get into properties, what types of properties are you seeing that are getting the most interest? People want the most. What are you seeing out there in terms of property types that people are interested in?
So most investors are, or at least in my experience, most real estate investors are looking for cash flow. All right. That or like if they're fix and flippers, and that's one thing. But for the most part, they're looking for cash flow. So with that, I think the Northeast in general has a lot of multifamily property. So I highly recommend that you look at 3 and 4 unit properties, and that's where most of my clients are looking, is at 3 and 4 unit properties, and they're flying off the shelves right now.
Even at these high rates, even at these
even at the high interest rates, high prices, all of that. The 3 and 4 unit properties are definitely going, in terms of investors looking for this, and even owner occupied. House hacking is a big thing right now. So a lot of people are looking at 3 and 4 unit properties, 2-family properties for house hackers as well. But yeah, 3 and 4 unit properties for your strict investors. That's pretty much what they're looking for right now.
Right. And do you think the rents right now justify these high prices? Will these investors get the return they're looking for? With
That's a great question. I feel like we are now getting to the point to whereas it's getting tough to cash flow. If you are paying the list price, it's getting to a point to where it's tough to cash flow. Because here's the thing, going back, I'll say last year or so, I'll put it like this. Let's go back to 2020. That's when things really start to take off, right? So rents were low and prices were relatively low compared to what they are now. But they were both increasing at a good rate. The rents were increasing rapidly. The prices of the properties were increasing rapidly. We're getting, and from what I'm seeing, we're kind of getting to a point to whereas the prices are still climbing, but the rents are struggling to keep up. So that's why I say to be patient. If you're currently in the market looking for a property, be patient, run your numbers. Let's go by your numbers. Do not get emotional. And make sure that the property actually cash flows. If cash flow is actually what you are interested in doing, because not all investors want or need cash flow, believe it or not. If there are people that are in a certain situation, maybe your 9-to-5 job, you have a large salary, and your personal expenses are low. Some of those investors, they're looking for appreciation. You know what I mean? But yeah, if you're looking for cash flow, make sure that you run your numbers. If you're an investor, make sure you run your numbers and make your offers based on that.
Okay, so what are some mistakes you see investors making in terms of running those numbers and doing their analysis? Do you see any improvements that can be made in just making sure they're accounting for all the expenses that goes into a property? Because I know that we manage over 300 properties for Connecticut investors, and we get offers to manage all the time. But when we see the analysis that they've done, there's no property management fee in there. The maintenance is way too low for these, some of these multifamily older properties in Waterbury. There's no snow removal. There's no pest control. There's no landscaping. We see a lot of the time the expenses they're not as accurate as they should be if you want those accurate numbers. Is that your experience?
100%. Yeah. And you actually hit one of the very important nails right on the head. And that is that many times when investors buy property, if they are planning on managing the property themselves, they don't budget in property management. I think that's a huge mistake, because here's the thing that I tell people all the time is that granted, you're buying this property and you're planning on managing it, but the day will likely come to whereas you either don't want to or you can't manage this property anymore. So if you don't budget in management now, then likely you will either have to sell the property or you'll have to hire a property manager. And so you'll definitely want to budget in property management into your numbers, even if you are planning to manage the property yourself. I also recommend, and this is kind of a bonus, I guess, I also recommend that anyone for your first several properties, don't use the income as to pay your personal bills and to go on vacations and things like that. I actually recommend, again, budget for property management, and even if you are managing the property yourself, then pay yourself that property management fee. That's your pay. You know what I mean? So yeah, I highly recommend that everyone that's looking to buy a property, I highly recommend that you actually budget in property management, along with all the other expenses that you had spoken about, snow removal, property tax and all that. People usually think about the property taxes, the petty all that good stuff. But they don't think about the, like I said, the snow removal, sometimes, trash removal, if we're talking about, 5 units or better, landscaping, all the things. I don't have the list in front of my head in front of my face right now. But there's all the expenses that you're going to face, vacancy, so on and so forth, that that you need to budget for, when you're buying the property.
Okay. And once they do acquire this property, what are some tips you have? I know you own property yourself and you do some management yourself. What are some of your favorite property management tips?
Create systems. So pretty much everybody has heard horror stories about, oh, listen, my uncle used to be a landlord. He got rid of the property because XYZ, right? And I'm gonna say 99.999% of those times, it's due to that person not having good systems, right? How are you going to deal with this particular situation? How are you going to deal with that particular situation? So what I recommend is that once you buy the property, and if you're a first-time landlord, you shouldn't go through a situation, or you should go through a situation, and as soon as you're finished figuring out how you're going to get through the situation, document that. Okay, document how you got through this, because that's creating systems, and your systems will get you through those same situations going forward. You know what I mean?
Yeah, because they will happen again. Nothing happens.
It will absolutely
it always happens over and over and over. Yeah.
And another benefit is that if you later on decide that you want to hire an assistant or whatever the case may be, now they have something to work off of, and now they know how you want for various situations to be handled. So my advice to new investors is create systems.
Right. We have a formula we use here at Idoni. We do it, document it, then delegate it. So the 3 Ds, I like that little, every time I find myself doing something more than once, I do it, then I document it, then I delegate it to our assistant or to our team. And, you get that off your plate. But yeah, that's some good tips. What do you look for? Do the quality of the tenants matter when you're either buying a property or showing a property? How much weight do you play to, the tenant base and what they may or may not be like?
It depends. So if I'm representing a client, I leave that 100% up to them. Okay, like I would not say, hey, listen, I wouldn't buy this property because this tenant is a nuisance, right?
Right.
Now I will point out, I will give my client information and say, this client is probably going to give you problems in these areas. Okay, that's me giving you education. It's your decision if you decide that you want to move forward or not. And I'll also probably give you tips on how you can mitigate that, right? So as an agent, I will give you information, in terms of, if a particular tenant is going to be a nuisance or not or whatnot. I'll give you education on it. If I'm buying, it really doesn't bother me, if there are nuisance tenants in the property, because I know how to deal with nuisance tenants.
Mm-hmm. Right. Yeah.
So yeah, it wouldn't necessarily bother me as a buyer, as an investor myself. But not everybody's built for this landlord life.
That's true. That's true. It is a tough business. You got to deal with a lot of different people. It can be fun and rewarding, but it's
absolutely. I love what I do, but yeah, that to answer your question, that I kind of leave that to the buyer. I give them the education, and I let them decide whether or not they want to, proceed or whatever the case may be.
Okay, so let's go into some of the new laws that have come about recently in Connecticut for landlords and tenants. I know we have the late fees can't have some adjustments on those late fees. What's kind of your take on that?
I don't like it. That's my take on it. So I mean, I'm in Connecticut. Connecticut is what Connecticut is, right? I don't invest out of state. I'm not licensed as a realtor in any other state. This is where I do business. So my thoughts and the way that I approach it is, what comes is going to come. There's nothing I can do about it. My job is to educate myself on it, and know how I'm going to work with it. So yeah, so they reduced the late fees to a maximum of $50. I think it's like $5 a day or whatever, up to a
Right.
maximum of $50. So
Or 5% of the balance.
right,
If
right,
it's a Section 8 tenant, you can only charge that 5% on their
yeah,
portion,
on their portion,
not
right.
the full.
So
Right.
yeah, I mean, with all of the changes, and the thing is, there actually were some other changes that they were trying to make that did not get passed. I'm going to say yet, but they did not pass. But my thing is understand what the laws are, um, and know how you're going to work with it. It is what it is. You know what I
Right.
mean? So,
There's another one for another law change, I believe, for application fees. You can only charge up to $50 on a tenant screening report, which you need to provide to the tenant, as well as not charging any move-in or move-out fees. I don't know if that was part of your process, but
I never charged that anyway, personally.
right, I know some companies did that.
Yeah.
So yeah, it's just a matter of taking it in, adjusting your systems, and going from there. I mean,
That's what it is.
it is what
Nothing
it
else you can really do.
is. Right. Is there anything else big this year that came that you think landlords should know about?
Um, Nothing. When you say big, I would say nothing necessarily big for me. If if there are landlords that were charging, the move in, move out fees and all that, and they were relying on that for their bottom line, then yes, that would be a huge thing. I never really charged that anyway. But again, I would just say that for anyone, make sure that you are up to date on, if you're in Connecticut, the Connecticut landlord tenant laws. Study the law, know what you're doing. Stay out of court, stay out of fair housing court, stay out of civil court, whatever the case may be. Just know the laws. Know the laws. And like I said, it is what it is. There's only but so much we can do. We live in Connecticut, so Connecticut is not a very landlord friendly state.
Right. Right. It's getting it's getting. I feel like they're following whatever New York does in terms of
Yeah.
some of these laws.
Well, thank God we're not there, because New York is just ludicrous. But I have my personal feelings about it. In terms of politically speaking, I won't get into all that right now. But again, I think that the best course of action is know the law and move accordingly.
All right. Okay. What are some of your predictions for next year? I know there's a lot of talk about recession, no recession. What are your thoughts on where we go into next year for real estate, either prices or recession trends? Rental prices. What do you see in the near future?
Yeah. So one thing that I want to make sure I get across is that recession does not necessarily equate housing crisis. It does not necessarily equate housing crash. So if the economy in general is in a recession, that does not mean that we are going to have a housing market crash. So are we going to enter into recession? Someone might say that we are in a recession. Some people might say we've been in a recession, and for political reasons, they just don't want to announce that. Okay. So are we going to enter, as far as the whole recession thing, we probably will, if we are not currently in a recession, we probably will go into recession. As it relates to this particular conversation, the housing market, what will happen with the housing market? I think that the prices will likely continue to rise. I think that they'll slow. And I think that they will level out at some point, probably next year. In full disclosure, I did say they're going to level out in 2023, but they've continued to increase. Just want to throw that out there. But yes, I think that they will continue to rise, in which they have done. And I do believe that they will level out. And I'll tell you why. I think that we're getting to a point of it's more so an affordability crisis right now. And so people can only pay but so much unless they start unless they start giving out 40-year mortgages or 50-year mortgages or whatever, and reduce the monthly out-of-pocket expenses of the borrower, we're going to hit an affordability ceiling. And that's what I believe will slow down and probably stifle the market. Not crash it, but just kind of level it out. Those are my thoughts.
Mm-hmm. How does that affect the renters? I think that now, if people can afford to buy, there'll be more renters in the market which may keep rent strong, keep them, up there, maybe even rising a bit since they can't afford to buy a house. How do you think renters?
I agree, and they both kind of go hand in hand. As rents increase, the prices of the properties will likely also continue to increase, because investors can pay more for the property because the property can sustain a higher, it'll have higher income. You know what I mean? So yes, as the affordability of buying a home for to actually reside in, as that becomes less of a realistic option for people, those people will remain in the rental market, and which will keep the rental market strong. It's just kind of pull and push on both ends, But again, I do believe that they will all kind of level out, because I feel like we're kind of approaching that affordability ceiling in terms of buyers as well as renters. I feel like we're kind of approaching that affordability ceiling in general.
Right. And your buyers who approach you do you see more FHA loans now because these interest rates are so high? I know there are different programs that give first-time home buyers a better shot with lower down payments, even a break in interest. What are you seeing in terms of loan types? Are you seeing more cash offers, more?
I'm seeing everything. To be honest with you, I'm seeing everything. It really depends on the buyer. In my personal experience, I can't really say that I'm seeing more of one than the other. A lot of first-time home buyers that are looking for a single-family home, yes, they're using. A lot of my people are using FHA. Investors, like sole investors, they can't use FHA because FHA it's an owner-occupied product.
Mm-hmm.
So they're using conventional or some sort of private money or even commercial loan or what have you. But yeah, I really can't say that I see one that's kind of jumping off the page more than another. It really just depends on the type of buyer it is.
Yeah. Okay. Sounds good. So how's your business going, Cameron? Where do you hope to be in the next couple of years in your business?
So I'm glad you asked that. So I actually recently in July is when I launched my brokerage, Trinai Real Estate. I was with another large brand company for 15 years. And I decided to go out and launch on my own. So my company is 2 months old, so I have a lot of plans and things that I plan to do with this. The handcuffs are off. The in terms of where I was to now, this is kind of my own. So I can kind of make it my own and do things that I want to do with it. So I'm excited, man. I'm really excited about things to come. As a company, my plan is to focus on education. So like I do a monthly webinars and so on and so forth, because my thing is I want, for if you're going to buy a property, if you're going to sell a property, or even if you're going to rent a property, I want you to be educated as to what you're getting yourself into. Because the thing is that people have long-term goals as well. So I don't want you to, if your goal is to, eventually have a bunch of rental properties, then your first property should probably not be your dream single-family home. Your first property should probably be a multi-family property. So my thing is, I want to find out where you're at, just as a company. This is what I kind of want to focus around, is finding out where the client is and where do you plan to get to. Based on that, we can kind of help you to determine what's the best route for you a lot of brokerages don't do that. They just say, you want to buy a house? Okay, well, here's a bunch of houses. And that's
Right.
pretty much that.
What did you say you couldn't do before, and now with your own company you can do?
I don't want to get into that. There were conversations, over there, it's like, okay, so if I wanted to do X, Y, Z, I need to kind of, launch it on my own. They're good people over there. I just want to kind of leave that over there, but that's that.
Okay. All right. Sounds good, man. So, I wish you good luck with your business. How can people get in touch with you?
So you can. I'm on Instagram. If you're on Instagram, it's just my name, Cameron Norfleet, Cameron. Last name is N. Well, you have it right there. Norfleet. It's just my name, Cameron Norfleet. That's where I'm pretty active at. You could also just go to my the broker's website and shoot me an email. You see it right there on the screen, how to spell Trinaya. And it's just Trinaya.com. And Trinaya, just so you know, is a combination of my kids' names. Because for me, this is a legacy thing.
Right.
It's all about legacy. So, just go to Trinaya.com or hit me up on Instagram. I'm also on YouTube. You could type in my name into YouTube and you'll see all my videos and all that. That's a good way to get in contact with me.
Okay, great. Well, Cameron, thanks for joining us, and we wish you all the success and luck in your business. And we hope things work out for the best. Thanks a lot.
Thank you so much. I appreciate it.
All right. Have a good day.
You too.